Shanghai is trading with just marginal gains actually, but it has moved into the green in the past 15 minutes or so. Hang Seng also 160 points higher.
There was a lot of public opinion, economist opinion saying that 4% is too tight, especially because of COVID.
Cement could do well, infrastructure could do well. L&T started to participate in the rally. This is a parabola. In a parabola, it's tough to re-enter once you exit.
October, November, December were good months. Credit growth did pick up.
A modest green of about 1/3%, 0.4 now. Not looking all that modest, it's getting better.
Demand is still holding up as of now. We've seen some improvements in the residential sector.
The uncertainty is removed, but it is not exactly something that some of the bond market participants were expecting.
Markets have come off from the day's high. In fact, just on the verge of breaking into the red for the Nifty and the Sensex.
Draft has been published. It was put out on the 28th of December. Over the next 30 days, the ministry would be inviting suggestions.
The board has unanimously cleared the name of Atanu Chakravarti, who is set to be the next chairperson of HDFC Bank, subject, of course, to Reserve Bank of India's approval.
The market has come off its highs, but we're still, just about 70 points away from that 14,000 mark on the Nifties.
Okay, the market has seen a bit of a dip today, but that dip was bought once again. But for third day running, and that's the point we've been making, the index to focus on really has been the Bank Nifty, which is where perhaps the risk reward has been in favor. And that index once again has outperformed 400 points higher, still very close to high point of the day, up about 1.3%. If you want to be nitpicking, the advanced decline today is in favor of the declines, and mid caps have not performed that much, but the banks have done phenomenally well. Let's see what the last hour brings for us. This is Closing Bell. I'm Anuj, and joining me today is Sonia. Sonia, hi, good afternoon.
Hi Anuj, good afternoon. So the holy grail really is the buy on dip situation, and that continues, right? I mean, even if you look at the financials, the IT stocks, all the market leaders, there's so much buying that you're seeing. Is it safe to say that the bulls have not lost their mojo just yet, and we could even be seeing 14,000 before the end of the year?
Sonia, 14,000 is possible. It could also perhaps, coincide with the expiry for all you know. 14,000 will happen with a gap, just like, all-time high happened with a gap. So it may happen that perhaps, say by tomorrow, you move in this another today's high, today's low, that kind of a band, and then, make a move towards say 13,960, 970, and then straight away with a gap up, you take out 14,000. That may happen. But really, I mean, if you focused on the right stocks and the right index, the last 3 days have made you a lot of money, especially on the Bank Nifty. Now we are talking about some 1,600 point gains on the Bank Nifty in 3 days. Even if you were to take the first day's gap up out of the equation, even then, you would have made a lot of money. So in that sense, I think it's clearly now looking like perhaps even the Bank Nifty wants to finish that all-time high business. It will be tough, of course, as you move closer to that. But 14,000 now looks a matter of when and not if. This is a global, party we are part of. Just a word, the volumes are very low. For an expiry week, these are abysmal volumes, and you will see that in the FI numbers today as well. The gross volumes have fallen to about 30% of what they normally are. And I think today also, don't be surprised if you see gross volumes of about 3,000 to 4,000 crores from the FI side, which used to be 15,000 crores till about last week. So right now what you're seeing is a bit of a domestic play, everyone taking advantage of this fact that this is a bull market, and you can't blame them. This is such a year in which traders, investors have seen the days of March and April, and they have gone through that, so they want to enjoy this this flourish, and why not?
Yeah. Why not? I was just going to tell you, I think the two of us are one of the few people who are actually sitting in Bombay, because most of the world, at least that I know, is either in Dubai or in Maldives or in Goa. And that's why perhaps the volumes are so low, right? Everyone's just enjoying the spoils and thinking, hey, it's been such a tough year for us. Let's just go out there and enjoy. But anyway, we have to still trade in the last 1 hour. So let's tell you what's happening on the show in the next 45 minutes. First up, after euphoric opening, the stocks across Asia lose ground on profit taking as the year end nears. Banking stocks lead the uptrend in Indian equities, and mid-caps underperform. Lots of corporate opinion lined up. We'll get you SBI on the credit and recoveries outlook and discuss the demand picture with two stocks that have been big movers, Havels and Dixon Tech. In stock action, IndusInd Bank gains almost 5%. We'll take a deep dive into the stock in our special segment Stock 360. Another company in focus today is Sterlite Tech as the stock rallies 200% from the March lows. We'll discuss that stellar move and their capex plans later on the show. Finally, as 2020 draws to a close, we recap the big movers and shakers this year in our special segment Recap 2020.
Okay, but first things first, the last 1 hour and the business of last 1 hour. How should you prepare yourself for this 1 hour of trade? Mitesh Thakkar is joining us with closing strategies. Mitesh, good afternoon. What have you made of the day's action and what would be your strategies now?
Yeah. So, Anuj, I think, we've kind of seen some cooling off from the zone of 3950, 14,000. I think that's the key takeaway. The other thing is that you were also highlighting is the Bank Nifty is still showing more strength. I think if somebody is long on Bank Nifty, just trail the stop loss to 31,100, which is roughly about 170, 180 points lower from here. And we will now look at 31,800 as the possible target area. Having said that, the stock call which I have, buy on Godrej Consumer, keep a stop at 728, look for targets of 770, and a buy on Exide with a stop at 187 for targets of 200.
Okay, thanks a lot, Mitesh. So a lot of buy calls coming in, but this is our favorite Stock 360 segment. So Anuj, what is the stock that you have on your radar today?
Well, it's a top Nifty gainer right now, which is IndusInd Bank. Sonia, I've discussed this many times, up 4% today. But just look at, that day I was discussing Tata Motors as a stock where you've seen so much variance, and I thought that was the biggest variation stock in the index. Actually, I was wrong. It's actually IndusInd Bank. This week, of course, 6%. This month is 5%. But just look at the stock from 52-week low. It's risen about 283%, and from 52-week high, still down about 43%. Now, simple things we all know, and in March, April, perhaps the market was a bit uncharitable. I think there were unfair comparisons which were drawn to Yes Bank. We've discussed that in the past. That was the biggest casualty of that fiasco. And it's a stock which at one point, that was of course long time back, about 2 years back, it used to get same valuation as HDFC Bank. But even later on, it collapsed from trading at 3 times price to book to about half times price to book, almost at a PSU bank kind of valuation. Now more respectable, 1.55 times price to book for FY22. So which I believe now perhaps for IndusInd, given its concerns on the book, perhaps could be the new normal. But Mehrbun Irani is now joining us. Mehrbun, good afternoon. I wanted your thoughts on IndusInd Bank. It's a stock we have discussed many times, but now almost trying to get back into 4 digits. What would be your call here?
I think every remark of yours, I think I heard right now, Anuj, and I think I fully endorse whatever you said. I would say that the market was rather harsh on IndusInd Bank. And I think one should actually go and question all those people who are possibly comparing an IndusInd Bank to Yes Bank. It was just not done. But the way the stock fell, I think, allow me to state, the most ardent bull, and you could include one of them as a person who has always spoken good about IndusInd Bank, I think somewhere we all got shaken up. A price which came down to maybe 250, 300 rupees, I think was a price screaming buy, but how many of us dared to go and buy? Despite overall feeling that, things are not all that bad. Now, having come up from 250, 300 levels by nearly a 300% move or 275% move, whatever, I think the stock, if you ask me from an investment angle at a price to book value of just 1.5 or 1.6 times, I think merits investment from a little longer term angle. Because the stock has gone up a little bit too sharply in the last 2, 3, 4 months, and people have realized that IndusInd Bank is not a Yes Bank, and people have gone and bought into it. The point is the stock may have a little bit of a consolidation. But even from here in a shorter term angle, if it moves up another 10, 12, 15%, I honestly will not be surprised. This is the stock which is in my personal portfolio, and I advise my clients also to possibly buy into it, clear disclosure in place.
Okay, stock in your personal portfolio, IndusInd Bank. The other stock I wanted to discuss, Mehruboon, was SBI, because the management was sounding very confident when we spoke to them earlier in the day. They say credit growth is back. There's an 8 to 10% growth that they're looking at, and they're also expecting to see faster recoveries of the stressed accounts. So let's first listen into what the management had to say, and then I want to come back to you to ask you your view on SBI for 2021. But first, let's listen into the company.
October, November, December were good months. Credit growth did pick up, and more so on the retail side. As we had said after our results, that we would think that over the next, in the second half especially, the growth on the credit side will be there. And we think that our growth should be between 8 to 10%. For the banking system, we know that the NPV of Bhushan, and this is something in the press already, that will give the banks about 33,000 crores. We'll get a larger portion because our exposure there was much bigger. Similarly, in the case of Bhushan also, we do expect that recovery will happen in the first half of 2021. So, I mean, that's a moving number, and there are plenty of ifs and buts. Depends a lot on the legal processes. I think both of the accounts are in their last leg, and we only hope that the bankers do recover a good amount of money. We do have an exposure to Shrey Infra. That account is currently in CLT, and there is a court order there against the banks. On Bhushan Power, again, the numbers are there. The amount that the banks will be getting is about 20,000 crore odd. That is for the full system. We would be a good maybe 15 to 20% of that. Domestic NIM would be in excess, would be around 3.3. And the overall, including the international book, we should be above 3 for sure.
Okay, so that's the word coming in from SBI. Mehruboon, I know that you're personally not a fan of PSU stocks, but SBI particularly, I mean, do you think, given that the worst could be over as per the management, this is a good stock to bet on for the long term?
Well, I think I got nothing against PSUs as such, Sonia, but the point is that SBI market has put it in the same basket like maybe an ITC and an Larsen and Toubro. No complaints with the company, no complaints with the entities, but at the end of it all, the way the stocks have moved over the last 2.5 years have been just like dogs. And allow me to state, I think at 320, 330, 340, there were virtually every research house screaming, it's a buy, it's a buy, it's a buy. From there, we saw a price maybe of around 150 rupees. Now, coming to SBI and what the management said to your channel this morning, I think I would like to add something more. I think, yes, I see a lot of write-backs happening. As far as I understand, there has not been any major request coming for a large amount of recast as far as loans goes. And whatever provision is made, there could be write-backs. Apart from that, what I understand from market sources is there is a very active VRS scheme going on. And a lot of people would be opting for it, and that will ultimately bring a major part of the cost, which is called the labor cost or the employee cost, which should come down. So there are reasons to be positive on SBI. Somewhere the market has recognized it, and at last the stock has started moving up. At the present price, what to do? I think, personally, I believe the stock should move up further from here.
Okay, should move up further from here. State Bank of India, 276 now on that stock. Just take a look at what the market is doing. It's been a bit of a comatose kind of situation for at least the last 1 hour or so. The market's been stuck here, 3920 thereabout on the Nifty, 31300 thereabout on the Bank Nifty. A couple of stocks have bounced back today though. IGL, for example, is back above 500. Mahanagar Gas is giving it company, and a couple of auto ancillary stocks, Exide and Apollo Tires, also doing well. So these stocks have looked good. Before we take a break, Mehruboon, I wanted your thoughts on some of these auto financiers which have seen big moves, Shriram Transport and Cholamandalam. Any thoughts here? Which would be your preferred pick, if any?
I think 100% at number one would be Chola. Market also has recognized it. The valuation now possibly look not very rich, but rich. The point is that, again, this is a sector in which people had virtually taken all the negatives, extrapolated it. And somewhere the recognition is coming that things are not going to be as bad for them as what they are. And ultimately, some of them, especially two of the names which you mentioned, are very well managed companies. I would possibly go with Cholamandalam.
Okay, go with Cholamandalam. That one has seen a big rise in this year, right? I mean, it came out of the woodworks almost. But let's do one thing. Let's take a quick commercial break on that note. On the other side of the break, we will be joined by Sushil Kedia of Kedianomics to tell us how to approach the brand new year 2021. Stay tuned.